Here's our best advice to make 2025 the best year of your life. Last year, we secured a massive $29.5 million loan to kick off the vertical phase of our built-to-rent townhome development project. That's the phase where you're going to see the building come to life. Framing's done, the roof, the walls, all that comes together this year. Now, we're not just stepping up our game, we're tripling down our efforts. If you're serious about transforming your financial future, just listen up. Step 1, eliminate distractions. Too many people are chasing shiny objects instead of focusing on what works. Here's where we show you exactly what works. We believe in transparency, not hoarding out knowledge. Why should these valuable insights be locked behind a 5, 6, or even 7-figure investments? So here it is, our playbook. Guys, in 2024, we started our largest development project, building 100 plus units, townhomes north of Dallas. Here's where the huge milestone. This is a huge milestone for us because this was the first time we entered into the build to rent space. You see, prior to this, we specialized in buying existing multifamily apartments. Think of 100 plus unit apartments throughout the country. Those were what we were buying. With this project, we're actually turning the dirt, aka the land, into an entire community. Actually, it's something that's going to build out a lasting legacy, a legacy asset that will provide cash flow for years to come for us and our investors. Our firm has existed for 6 years, and while we've grown significantly, we can't shake the feeling that we're still a tiny ant in a vast universe of real estate. Here's how we feel about where we're at right now. I feel like we're steady, but we're way too slow, especially in today's market environment where there's an undercurrent of urgency pushing us to break through our current limits and accelerate our trajectory. We've learned some painful lessons along the way, for sure, from burst pipes during winter storms to navigating rising interest rates and dealing with the aftermath of inflation shock. I'm sure you guys have felt it as well. But every obstacle wasn't something that stopped us from moving forward. They were just stepping stones to something greater. You see, our vision has always been the same: to sculpt a multi-billion-dollar empire that not only builds wealth, but empowers others to join us on this investment journey, growing their fortunes right alongside us, and of course, for us to deliver premium returns to our past investors. We aim to redefine wealth creation, making it not just about making more money, but actually helping people grow beyond just wealth accumulation. So for you guys who are looking to take action, here's your action plan. Take a hard look at your calendar and where you're spending your time. What are you investing your time and money into right now? Are they things that are distracting you, or are they things that are actually building your future? If they're distractions, eliminate them. If they're stepping stones to building a massive, it doesn't have to be just value in terms of wealth, but like a future that you truly can be proud of, then continue building on that. Step number 2, get started. This is where I know a lot of people have that inertia. We started out small as well. We had to come to grips with the basics, and soon we discovered what we were doing in our initial strategy was way off the mark. We started out small, like most of you guys, purchasing single family homes and just waiting for equity to happen. And the clock was just ticking, but very slowly, as you guys may know. And so while that may not be considered a misstep per se, it became clear that trying to do everything ourselves was really just limiting us. So we had to step back and we had to reassess and start thinking, like, how else do we capture this? And what we discovered was we had to build a mighty team. We strongly believe that human capital is the difference in all these investment opportunities. Today, our focus is on acquiring A-class premium assets, high-value properties in emerging markets that offers incredible opportunities for long-term appreciation, steady cash flow, and of course, major tax benefits, which is really inherently one of the major benefits of investing in our type of real estate assets. We're talking about big moves here with price tags anywhere between $40 to $50 million range and beyond. Our biggest purchase to date is $70+ million deal. We're talking about these big moves with these big price tag, not to impress you, but to impress upon you that there's ways to get this done, even if you're starting out from scratch. And that was us 6 years ago. So we're talking not just from theory, but actual practice. We came from $0 and now we have a $300 million portfolio, not because we had a stack of cash in our backpacks, but because we learned how to play this game correctly. And so while we're letting other syndicators who are in this space acquire smaller buildings, older assets, You get that cake, right? We'll let you take that. We chose a much easier route for us. So our investment strategy involves midterm holdings of around 5 years, at the end of which we either select to sell the property or refinance it to maintain cash flow. So we focus on properties, and here's the key: we focus on properties not that has massive capex requirements or a huge colossal business plan that has to be undertaken. Those are difficult things. We like it easy. So we focus on looking for properties with a gap. So the gap is either in operations or in management. What do I mean by this? So in operations, it may mean that they're underutilizing the property. There are things that they can contribute to the property that can add value significantly, which they're not tapping into now. And that was some of the stuff that I addressed in last week's live, where we looked at ways to raise income without raising rents. Those were some of the things. Other things would be like, what are some of the expense items that can be eliminated? Can we negotiate better terms with utilities? Can we consolidate certain things to make it so that the property is operating more efficiently? You'd be surprised. A lot of operators don't pay attention to the fine details, and that's small changes that we can make massive impact to the value of the property, the cash flow, etc. So that's the first gap that we try to see in any assets we purchase. The second one is management gap. And this goes back to what I told you about the human capital is so important in this business and any other business. This is where the value lies. We are creating a business plan that can then force appreciate on the property beyond just waiting for organic inflation growth to happen. You can see throughout history that property values are increasing not only with pace keeping pace with inflation. However, it goes beyond that. Many years you'll see that inflation increased 4%, real estate value jumps 9%. In 2021, real estate inflation was 7%, value increased 19%. So those things happen organically, but beyond just relying on organic growth, we also look for ways that we can enhance the value of the property. And again, operational gaps, management gaps are clearly easy things that we are experienced with and can fix pretty easily. So again, we believe that people in the building are key to any investment success. That's like when you choose to pick a jockey, not the horse. And for us, we always look for that. In fact, one of our property that we've purchased, we at the beginning of the acquisition process, we were deciding, should we keep the current property management team or do we look for a new team? We chose to inherit the property management team that the previous owner had on site, and this helps with the consistency and continuity of the project. They know the building way better than we do. They know the history of the tenants. They understand where the skeletons are hidden. And sometimes it's funny because a lot of times we can tour the properties, we can do our due diligence, but until you own the property, there are things that you're going to discover. And every asset never fails the property management company, because they've handled the property previously. They can come and share with us, okay, these are the things that you may have not been aware of, but okay, this is the stuff that we should fix, or these are things that the previous management ownership chose not to do because they're about to sell the property. It would have been a capital intensive undertaking. So those are the things that we look for. So back to the property that we purchased. So this property, we inherited the property management company, so we chose to go with that one. To our surprise, and we didn't know this at the time, is that they actually handle all the assets for the Walton family. Which Walton family? Well, the one that owns Walmart, the biggest retailer in the entire world. They handle all the development projects. They handle all their apartments. So rest assured that they know what they're doing. The reason we chose to work with them, and we love working with them, is because they have this entrepreneurial spirits. You see, like they are an extension of us. So being on site every single day, they're the people who are coming up with a creative plan to enhance income, to help expedite things that are happening on site. Sometimes there's things in this project. There's both a retail component, a triple net lease component with 19 triple net lease units, alongside with our commercial 200 plus residential units. And so a lot of times we have a powwow. We talk about, okay, what can we do to enhance this? What kind of features can we add? Are there hybrids? Are there collaborations that can happen? And a lot of time things are happening on site that they brought to our table. For instance, we have a structured parking lot, and because there's scarce parking in the community around us, we decided to convert that into an income generating asset. And instead of actually having a attendant at the gate taking your ticket, all that stuff, that's old school. They actually came to us and said, hey, there's a third-party software company that actually can actually help manage the parking structure. They even help tow the trucks or cars that are parked incorrectly in different stalls. And every time someone parks in a stall, they have to pay through an app, all that jazz, which increases our income, makes our property have that convenient feel, but also we get to maximize the income that the structure can produce for us. So that's like one small example. The other stuff would be they have so many different tenant engagement activities. They call it activation. So this means, how do we engage our tenants so they don't want to leave, that they love living here so much that the surrounding properties don't stand a chance? In a competitive market, you have to be able to stand out, and it's not always about rents. Of course, our property, in our opinion, is the best in class in this area. But beyond that, it's a level of service that makes this feel more like a 5-star resort rather than a home. We have engagement parties where there's DJs playing, pool parties. Don't make fun of them, but in this area, they love goat yoga. Like live goats, not goat like Tom Brady, the goat, like the greatest of all time yoga. Not that, but literally goats. They love it. All those interesting things makes this a really strong community. And when people have a sense of community, they don't want to leave. They don't want to leave their besties. They don't want to leave that cool vibe and move down the street. We have properties, our comparable properties in the area, and we're always surprised why their occupancy is significantly lower than ours. In fact, there's a property that was built this past year, 2024, and they're struggling. They're struggling to get rents to increase. They're struggling with occupancy. There's a couple of reasons for that, that we discovered. Number one is, due to their cost of construction, they couldn't build the unit to our standards. The other one is their location is in an inferior part of town. But again, the more important thing I think is the human capital, that they're not activating the people. They don't have an engaging environment, because this has to be a home, not a house, not a 4 walls for someone to live in. Okay, so for you guys, the action is to get started now. Don't wait for the perfect time. People always think that you have to have everything sorted out, everything ready. But guys, those people never get started, because there's never going to be an instance where you have everything all sorted out. Because guess what? You're not standing still. These things are organic, moving. Things are happening in whichever direction. So you have to be able to be flexible and agile versus just being rigid with, okay, this is my 1 through 10 plan and I'm going to stick with it regardless of what happens. It's like the surfer who ends up not catching a wave at all because she or he is just waiting for that perfect wave. There's no such thing as perfection. Perfection is probably one of the most deleterious form of like mind whatever scenario, because if you think that you have to be perfect, you're never going to be able to take that move. So whether it's your first property or you're trying to go big and scale, like we always say, go big now. Think of the long-term scalability. Most people think of, oh man, I need a deep pocket, I need insider connections, or I need to be insanely lucky to make this all work out. But they're dead wrong. It comes down to, who's your team that you're putting around you? Did you buy the right asset at the right price? Did you do your due diligence? Did you actually buy a property that you can actually see can grow? And if it's not those things, then it wouldn't work. But those things aren't that difficult to organize. And the idea of not having enough money or not having the connection, go check out our latest video, our long form video. It talks about the 4 ways that you can enter into this space, and not all 4 requires you to have a lot of money. So definitely go check that out. So step 3 is get better. Success is all about constant learning and iterations. That's why some people fail and some people succeed, because the first chance you hit an obstacle, if you choose that to be the end of the road, cut yourself off, then you're right. Like that's over. That's game over for you. But if you consider those challenges as ways for you to iterate, then you're always going to come out with a stronger position. Like we talked about all the challenges that happen. One of the key things that we now understand really, really, really well is when anyone's buying a property, you have to match the loan duration with the business plan. And the mismatch that's happened is the reason why real estate right now seems to be under a lot of pressure, is because we have loan products that do not match the business plan. The deals that have that kind of match, even in today's environment, is doing significantly well. It's doing much better because that that lack of clarity caused a lot of vulnerability, high interest rates, screwed up a lot of mortgage payments, screwed up cash flow. If that was matched with the business plan, those scenarios wouldn't happen. And that's why, like, all these things, we're never going to get it all perfect, but we feel like we've gotten it right more than wrong. And we feel like any of the changes that we have to make, obstacles that we face, are things that will make the property better in the long run. So I feel like, especially in assets like multifamily real estate, because the value is only important when you buy, if you refi, and when you sell. Any other time, the valuation is something that doesn't impact the performance of the property. It doesn't impact the rents that people are paying. So those are things that you have to think about. We've hosted an exclusive mastermind in Malibu and Hawaii in December, and just going over how we raised $130 million in just 6 years. And we believe in growth is just finding what works, doubling down, and cutting out what doesn't. And that's the really important part. It seems simple, but a lot of times we cling to these things that we think we should, even though we know it doesn't work. In our hearts, we know it doesn't work. So we've walked away from deals that didn't meet our criteria. Again, we're not buying any more C-class properties. We've learned from that. That was something that we had to buy into when we first started in multifamily, but they come with way too many headaches. So we focus on aligning our assets with our long-term vision. If people come to us with deals and they want us to invest with them, we've had that happen a lot. First thing, we want them to not bring us C-class deals. Like, the people who bring us deals, they have to understand what is our thesis. And so bringing us things that we're not interested in investing in would make no sense. People reaching out with hotel investments, or today I got an email for some other thing that I don't even exactly understand. It's like, no, that's not our bread and butter. That's not our long-term vision for our business. So we're not going to engage in something like that. Action plan for you guys in this step is to audit your current strategy. Are the things that you're investing in right now, are they in alignment with your long-term goals? Or are you just settling because that's what you've been doing? Settling is the best way to fail, in our opinion. Okay, step number 4 is never stop. So 2023, obviously, that threw us plenty of curveballs away, but we just kept going. The rapid rate hikes from 2022 to 2020 really hit real estate market hard. Every market, in fact, shaking up values, making it feel like there's all these obstacles that we had to keep overcoming. And let's not forget that apartment ownership comes with its fair share of surprises. We've had fires, we've had winter storms, pipe bursts, business plan that takes unexpected turns, you name it, right? We've dealt with all those things. So at the start of 2024, in fact, we saw commercial real estate values like really hit a dark spot, right? Like, it went down. But as we're coming out of 2024 and now in 2025, we're seeing that the private real estate market is actually slowly recovering. It may not be a dramatic V-shaped recovery, but it's definitely making progress. And so what's driving the recovery are 2 major forces that are really critical. Number 1 is lower cost of capital. The feds are cutting rates. You guys know they cut it 3 times in 2024. Banks are adjusting their lending spreads, making it a little bit more affordable to borrow money. And this is the amount that the bank charges you over some sort of index like SOFR. This means that there's more liquidity in the market, and there's plenty of people looking to bet on this asset. European markets are doing really, really badly, and so they're looking to the United States. And one of the things that is interesting is they consider multifamily real estate in the United States as their safe deposit box, because there's a fundamental belief in U.S. Economics, U.S. Businesses, U.S. real estates. So therefore, this is like, you're seeing influx of foreign money, not just domestic money, coming into the space right now as well. Number 2 is higher rates that have led to a slowdown in construction. So I talked a little bit about the competitive building that was finished in 2004, how they couldn't build to our standards because of interest rates. And that hit them hard, right? That hit a lot of construction. A lot of people, in the construction business, they actually had to pause construction. The interesting thing, like with new developments right now, they're actually down about 60 to 80%. So there's a definite supply squeeze. You may not feel it today. You may hear a lot of news about there's a lot of units coming online. Well, those were the ones that were almost completed. But you watch the ones that haven't started or were partially started. A lot of them are not continuing, or they've paused completely for the time being. So this is something that as interest rates starts continuing to stabilize and come down gradually, you're going to start seeing major opportunities here. For us, what we've chosen to do with our development project is very, in our opinion, very innovative, and we want it. And the reason we even chose it, we can go into this in another video. It was a very interesting path that we chose to do this way. There's two phases to multifamily developments: the horizontal and the vertical. Horizontal is very simple. Anything that's underneath the dirt, sewer line, electrical lines, grading the soil, all that good stuff. We decided to pay for the cost of the land, the cost of the entitlement, the engineering costs, the architect costs, permitting costs, all those costs, along with the horizontal development with equity money that we've raised. Reason we chose to do this is because so we can cut our own checks. We wouldn't have to be under the pressure of a loan from a lender. When we're going to start, how fast can we go? And that's why we didn't stop at all during our horizontal phase, because we weren't impacted by the interest rates hikes or lending requirements of the bank. We already have that done. The only phase that we chose to do the vertical, which now becomes a very shortened time frame, is the vertical phase that we mentioned that I mentioned at the beginning of the video. And that's why our scenario is going to fit perfectly as our BTR community comes online. That's where the opportunity is going to lie ahead. Okay, so what does this mean for real estate investing? History tells us that if you invested, most of us are too young for this, I know, but some may not. But if you study history, you would see this, that if you invested post 1990s, the loan savings and loan crisis happened, you made a lot of money. If you invested after the great financial crisis, which is 2008, which again, some of you guys are probably too young, we were too young to invest in, you also made a lot of money. And this is what we believe is one of those moments. It's a golden window of opportunity. If last year was steady but way too slow, this year we're going all in. We're planning to deploy millions of dollars in debt and equity capital before the all clear sign flashes, before the rest of the market catches on. Because here's the thing, while the S&P 500 is hovering at near all-time highs, corporate spreads are tighter than ever. Real estate market, this massive $20 trillion asset class, is still completely undervalued. Again, this massive $20 trillion asset class is still undervalued. So right now, you can buy properties well below its replacement cost. And that's exactly why we're gearing up to become more aggressive in the years to come. We're committed to making these waves to create exceptional opportunities, one that offer big spread compared to what investors are typically earning through traditional fixed income or cash. So our goal has always been to open doors that was once reserved for the ultra wealthy, to make these opportunities accessible to investors like you and us. Whether it's multifamily acquisitions or pioneer build-to-rent developments, we're constantly seeking out new ways to create wealth beyond what was once imaginable. And 2025, it's all about scaling the vision even further. To us, wealth isn't just about numbers. It's about freedom, the legacy, and the impact that we can make together. So if you're ready to step into the future where your money works as hard as you do, where your opportunities once locked behind closed doors are now within reach, stick with us. The best is yet to come. Your action plan for this last step is commit to persistence. The market won't wait for you. Stay focused, stay hungry, and keep pushing forward. If you want to see how we turn $10,000 into $3.7 million with no rate hikes needed, then watch this video.